Hello, gang. This is Asiff Hirji of Figure, and I'm joined by Albert Wagner of Union Square Ventures, and we're meant to have a fireside chat. And it's pretty timing is pretty good given that the Genesis block just went. So congratulations to Manib and the entire team. This is super exciting.
Indeed, Asif, it's good to see you, and
Yeah,
same here. Congratulations to the whole everybody who participates in the ecosystem on this momentous moment. So,
yeah, really amazing. It's been a long. Albert, you've been around this project for a long time. I've known Manib for a while. Maybe we start by just talking a little bit about how we got involved in Blockstack and why we thought it was important at the time.
yeah, I think that's a great starting point. I actually first got to know Munib and also at the time Ryan when the project was called One Name, and I sort of have had a long-standing view that one of the key things that we need to figure out on the internet is sort of self-sovereign identity. So at the moment on the internet, we're largely Albert Wenger at Twitter, or Albert Wenger at Gmail, or some other such thing. So these identities are controlled by large corporations. In the real world, the physical world, we have identities that are controlled by governments, passports. And I believe that we need something similar for the online world. And I wrote a series of blog posts about that, and that's how I met Munib and Ryan at the time. And I really, it's been a really fascinating journey from there to kind of figure out what are the infrastructure pieces that are necessary for this. And it's maybe worth recalling that in the earliest days, one of the very first versions of the system was built on a completely different chain, which was called the Namecoin chain. And something that was discovered was that chain just wasn't very secure. And I think one thing that we've learned as time has gone on is that there will only ever be very few truly secure chains, because it's very, very difficult to get to security. But that's how long I've known the project. How about yourself? How did you first connect with?
So I met Munib back in early 2017 or mid 2017, I guess. I was running Coinbase at the time, and everyone and their dog was doing an ICO, and it was the start of the last Bitcoin run. And here was this very earnest guy who was talking about a utility chain, and a chain with real utility. And unlike everybody else, he'd taken the path of registering it as a security and going forward that way, which seemed a really hard way to do it. And I remember, one, being impressed with him, but also being impressed with the fact that they chose to do it the right way, which is the hard way, and not the easy way, which everyone else was doing, which is just to launch as an ICO and hope for the best. And I think, honestly, with what's been happening recently with things like Ripple and so on, Manib and team have indicated that path, and so that's how I got to know him, because he was talking to Coinbase about the fact that we at that time were going to have an ATS to trade tokenized securities. So that's how I got to know. I've been in touch, and I've been impressed with the progress that he and the team have been making.
Well, Coinbase too, I mean, is interesting because it took the regulated path. I mean, it's a regulated money services transmitter and so forth. Yeah, how was that? How did that influence how you were able to run the business?
No, that's a good question. Look, Coinbase from the beginning started as saying, look, we're going to be the safest, easiest way to get exposure to crypto. And you cannot have that value proposition without being regulated, without being on the right side of the regulators. If you touch the fiat world, you have to be. You can't use the Silicon Valley aphorism of run fast and break things when you're talking about people's money, right? And so that just doesn't work. And so by taking the stance of being regulatory, being regulated, I think we did a lot to help expand the universe of people who were into crypto. I think crypto would be much more industry if players like Coinbase and others hadn't taken the regulated path to allow people to go from fiat to crypto. And so we were instrumental in trying to get consensus around what it means to actually get a token listed. So we helped create the entity that now looks at all these listings and opines on whether something's a security or not a security. And it was again in that vein that I was really impressed with the way Munib and team were conducting themselves and stayed in touch with that project and have been helping him, as an advisor now since.
Yeah, it was quite the intense discussion between the team and the board and everybody else, but feels very much like an important path to be trailblazing, because it has made it possible for people in the U.S. to participate. Other projects have chosen other paths, such as creating the project entirely outside of the U.S., not having people in the U.S. easy access to a project, and so this too now is an incredible moment in time, because it's not just the launch of the mainnet, but it's also a sign that this project has really become very decentralized. I mean, there's lots of different miners, for example. I don't know that we know who all the miners are, and that's the beauty of these systems is anybody can participate in them. So that's it certainly wasn't the easiest route to go through, because as Asiff, you've been around the financial world for a long time. The filing requirements that you have to meet are pretty onerous in this type of process. On the other hand, they also provide a lot of transparency, and so people sometimes are like, oh, it's only an onerous process, but it does produce transparency. People could see how the company was financed and how much money they were spending, how much money they had, and in some of these other processes, nobody knew where the money had gone and who was using it and to what end. So
or where it went. Exactly. And I think that's really important. Look, I ironically, there needs to be that level of trust through transparency around a lot of these decentralized protocols. So if you come back to why was I excited about this, it's not just that Munib and team were doing it the right way, but now it's Tax 2.0. I think they're tackling one of the most important challenges that we have, which is the dominant crypto asset, which is Bitcoin, which is the thing that most people are comfortable with, which is now getting institutional adoption, where most of the value is tied up. Unfortunately, isn't able to innovate as quickly as some of the others like Ethereum. Like, look at all the DeFi progress on Ethereum, and that's all because of the fact that it has smart contract capability. And so I don't know what your point of view is, Albert, but for me, the promise here was, can you bring that level of innovation and programmability to Bitcoin without polluting the nature of Bitcoin itself?
Yeah, I think that I think I was listening in a little bit earlier to Peter talking about slow money and fast money, and I saw this James Stervick, I'm sure I'm butchering his last name, posted today that the dream of Bitcoin is dead because Bitcoin can never be used as money because look at these great price fluctuations, and I think it's sort of funny because the contrast is so different, right? I think people like Peter, who've been in the crypto system for a long time, there's a long-term vision. This isn't about this isn't about a month-to-month price fluctuation. This isn't even about a year-to-year price fluctuation. This is about trying to create whole new underpinnings for the financial system, whole new underpinnings for systems of trust, whole new underpinnings for systems of identity. And if once you zoom out and you take that perspective, you don't want to have the foundation be iterated on at super high speed. You want the foundation to be rock solid, and you want the foundation to be changed with extreme care and thoughtfulness, because everything else will then rest on that foundation. So in many ways, the sort of slowness of the evolution of the Bitcoin core itself, I think, is very much a feature, not a bug. But the big unlock now is to create a new layer. And this is really how, computer science and computer systems have advanced anywhere, basically, is that you wind up with some kind of rock solid foundation on which you can then innovate. And so it's very exciting.
No, I totally agree. And in fact, I got kidded for having a tweet recently where I said, if you're checking the price of Bitcoin daily, you're kind of missing the point, because it's a long-term inflation hedge.
You're completely missing the point.
Yeah, you're missing the point. I mean, yes, people do trade it, but that's not what it's for. But the point you make, I think, is super important, which is that you want the foundation to be super solid. You want it something that is well known. You want it to be that store of value. But to unlock then the potential of that store of value, it needs to have some element of programmability. And I would
Exactly.
point to, I point to the amount of wrapped Bitcoin that is floating around on DeFi exchanges right now and floating around on DeFi products. And that just tells you how much pent-up demand there is for this. And wrapped Bitcoin is actually not a great product. It suffers from a lot of defects. And so if you could create the programmability that you want out of, like an Ethereum smart contract, but on Bitcoin itself without, as you said, compromising the base layer, I mean, that's the real breakthrough. And I think that is what Stacks 2.0 is trying to do. And so for me, the excitement is how much innovation will we unleash over the next, 12 to 18 to 24 months, because we're bringing this kind of bringing this kind of capability, which didn't exist before, to Bitcoin itself.
And this is also where I think that the whole idea, the set of ideas behind proof of transfer are so exciting, is because basically what people can earn from participating in this new consensus will increase with adoption. So this it becomes a whole incentive effect for both fostering adoption, and then as adoption happens, it will increase the benefit from participating in the protocol. So this feels very promising, because it mirrors some of why Bitcoin became large as a system in the first place, because participating in the consensus protocol was a financially rewarding activity. I'm curious how you sort of see the institutional world. Like I remember when the 2017 bubble burst, and everybody's like, well, that's not a problem because institutions are around the corner, they're going to come in next year immediately. And I was sort of like, I don't think so. But it feels like that tide has changed. Is that your feeling as well?
Yeah, so when we saw the run up in 2017, which was entirely retail led, right?
Yeah.
Let's be clear that the entire run up in 17 was retail. Yeah, I and others argue that institutions will eventually come, and for them to come, there needs to be an easy on-ramp for them, just in the same way as there was for consumers. And so that's why you saw the launch of custodians like Coinbase Custody and others. It's why you saw the launch of OTC desks, right? Like Circle had an OTC desk, and a bunch of market makers had them. You were replicating the functionality that exists in the equities or fixed income world for institutions. You were replicating that for crypto, right? And so those were the investments that were laid down in late 17, early 18. And I still think that had that rally continued for another, call it 3, 4, 5, 6 months, you may have had institutional adoption back then. But human nature being what it is, when Bitcoin goes from 3,000 to 20,000, that's when institutions got interested and started talking, and it crashes from 20,000 down to 10, and they're like, no, I don't want to touch it. Now it goes from 10,000 to 40, and suddenly they're super excited again, and you know what's going to happen, right? It will correct at some point, but I think this time the rally has been strong enough and long enough that the institutions that were playing with it back in 17 are now adopting it for sure. And you've got something I've never seen before, which are corporates that are basically taking excess cash and sticking it into Bitcoin. And some of them, frankly, that didn't have a robust business model to begin with. And so this was probably better than an M&A transaction that they could have done. But I wouldn't have predicted that. But I'm really glad to see institutional adoption starting. It's starting. It's very nascent. It's starting.
Yeah.
Right.
It's interesting, as a venture fund, I mean, we have our investors who are so-called limited partners, and they are very much, a lot of them are institutional capital, it's pension funds, university endowments, and we've had many of our LPs for long periods of time, and so we started talking to them about crypto when we made our first investment, which was Coinbase, incidentally, and so we're talking back in 2012. And we sort of survey them as to whether they have since then independently acquired any crypto assets. And so far, still nobody's done it.
Right.
And as you mentioned, custody really weighs heavily on people's mind. I mean, nobody wants to be the one who has $240 million that they don't know how to get to. So, that's, and so it takes very robust offerings to get there.
Yeah.
Maybe
So sorry, I joke, but again, the Bitcoin maximalists will get mad at me, but I think one of the breakthroughs of Coinbase, literally for crypto, was the fact that you could do a password reset. I know that sounds trite, but it's true. It's like you never want to be that person that I can't remember my password, and therefore there's some amount of Bitcoin tied up that I will never get access to again.
Yeah, and I think that one of the interesting things, and this may actually provide a segue for us to talking a little bit about the future, is for things to get really broad adoption, they need to be easily accessible to people. And I sometimes point out to folks that the web didn't really fully take off until Microsoft started bundling Internet Explorer with Windows. And so, on the one hand, you were sort of like, that's a kind of an awful move, I mean, that's typical monopolist and so forth. And it was bad. And, there was the whole cut of Netscape's air supply discussion and all that. But the reality is, you can overlay that on a chart, you can look at the web's growth, and it basically takes off. Why? Because previously, people had to go download something in order to be on the web. But it's kind of a catch-22. It's like, you tell me I have to go download something. I don't even know how to download something, right? On my computer.
Yeah.
So, which is also why AOL was sending out all these disks. So I think people who, yes, there's something beautiful about being able to self-host. It is beautiful that you don't need an intermediary. But that doesn't mean that in order to get to adoption, you don't want to have a bunch of intermediaries that make it easy for lots of people who don't want that risk or who don't want that challenge. And so it's a good segue to maybe talk a little bit about what both you and I think, the future here will hold in decentralized. And I would posit that, building systems that are really easily accessible, have a good user experience, and have, don't require people to learn lots and lots of new terms. I mean, they may learn them along the way. They may learn along the way that they have a wallet. They may learn along the way that they have a key. But if you need to learn that up front, that feels very difficult. Just like if you needed to learn up front that you had to download a browser as opposed to just click here, that was a high hurdle for a lot of people.
No, I agree. I look at all of the innovation that's happening on Ethereum with DeFi, which is amazing, and yet it's skewed to only the early adopters, because it is hard. It is really hard, right? You need the wallet. You need to know how to actually move funds. You need to know how to stake them. You need to know how to actually price. And in some cases, I think the pricing is off, but that's a different topic. But I look at that adoption, and it is entirely at the early adopter phase and retail. And it's a precursor to what I think is going to happen, which is you will eventually get the mass adopting some of those things, and you'll get institutions coming into that too. But not unless you have that on Bitcoin as well, because that's where the bulk of the value is stored. And so if you can't bring that functionality to where the bulk of the value is stored, then you're compromising the entire system. And so this to me is why the Stacks 2.0 launch is so interesting. And I think that's what you'll see. And by the way, in the same way that COVID, I think, accelerated a lot of tech trends that were going on anyway by, Satya Nadella would say, with several years. So whether it was remote work or any of those things, I think that what we're seeing now with the President of the United States being kicked off of Twitter and other things is accelerating the move to decentralized systems, both because the consumers want that, right? Because if you were a president, you want a system that you could get kicked off, but also founders want that. I mean, if you're a founder, why would you want to create a centralized system today and be in the crosshairs of government? I mean, I think it's insanity. So
well, and that, by the way, is interesting with regard to Bitcoin, right? Because one of the even most magic aspects of Bitcoin is that we don't really know who was the founder. So there isn't even anybody you can go talk to necessarily today. And in many ways, I hope that stays that way. And I think we're seeing that. I think Blockstack and the Stacks project and ecosystem has taken huge steps towards decentralization, but that's an actual journey that needs to happen. Right. So
no, totally.
We're getting some questions here also. Yeah, go ahead, Asiff.
No, I was just going to say that to me is the magic of Bitcoin, is not just that it's a store of value, not just that it's inflation proof, but the fact that it showed you how to build a truly decentralized entity. And I think that's where we're going. I think 20 years from now, we'll have a lot of DAOs that are doing very, very basic primitive functions for us, and no one will know who created them, or there's nobody to go call in front of the government. Sorry,
So,
Albert, you wanted to move to the questions?
Yeah, I think we should take a couple of the questions that are in here. So one
Sure.
question here is that how much institutional funding is going to companies that are developing decentralized applications and projects? Well, let me maybe kick this off, and as if you should chime in here as well. But there's obviously, Union Square Ventures, we are not a crypto-only fund. We invest in lots of things, but we continue to fund the development of crypto projects. And then there are dedicated funds, such as Placeholder and Polychain and many others, and they there's a lot of institutional capital funding in the development of new projects. I think what's interesting about that right now is that a lot more thought is being given early on to what the role and influence of those investors ought to be relative to the governance of the community. And I think one of the most exciting things is that much more attention is being given to the role of community. And I think the Blockstack team has done an amazing job listening to community from early on in the project. But I think that was for some time that was more the exception than the rule, and it's great to see that that's becoming the norm now.
Yeah, I agree with that. So there's another question here about will this launch help bring an end to the way exchanges are currently acting like casinos with investors and gamblers? so look, my answer to that is human nature is human nature. People look for that kind of adrenaline rush. It used to be like I used to run Ameritrade in a past life, right? And it used to be in the late 90s, it was equities, right? Everyone in the dog was trading equities. Then it became options, then it became futures, then it became Forex, then it became crypto. And if you look at what happened in COVID, a whole bunch of sports betting went away because sports went away. And what happened? These people flocked to guess where? Places like Robinhood and others. And now you had Tesla being worth more than every other car company on the planet put together × 2, and DoorDash being worth more than the entire sum of all restaurant chains in the United States put together. So you have some things that just don't fundamentally make sense. But that's what happens with retail. You will never get rid of the retail consumer's appetite for that kind of risk, right? It is, and in some ways, it's better that they do that than go to the casino, right? At least they have some chance of making some money. But
it's not entirely rigged by the house.
It's not entirely rigged by the house, right? So I don't think you're going to get rid of that. I do think you will have a lot of really lower cost, better products being delivered. Like there's so much friction in financial services because of the things you need to do to secure the transaction and make it trustful. And by using blockchain, you don't need to do that, right? And so if you've got Bitcoin coupled with smart contracts, I think you bring the DeFi ecosystem to more of the mass, and you can over time, like not this year, it'll take several years to do this, but you can get, as you said, Albert, the UI right and everything else, and you will bring a lot more people into being served by financial products than currently cannot be served. That's what I think that's the
perfect point to wrap up on, which is the system's life. Go build great things on it, things that make finance more accessible to everybody.
Absolutely, that's great. Muneeb and team, thanks for having us.
Yes, indeed.
Congratulations again.
And congratulations.
Absolutely. Okay, take care.